You're watching CNBC TV 18. Now, 2023 has been a year of conflict, from Ukraine to Gaza to South Sudan. War is raging across several parts of the world. Geopolitics has largely shaped the movement across commodity markets. Manisha Gupta is here with a wrap and tells us what's in store for investors in 2024.
2023 can best be described as a year of conflicts among countries, erratic weather and high interest rates. As per a Bank of America report, there were 300 rate hikes across global central banks from 21 through 23. But 2024 could see around 152 rate cuts, and that would be the major theme for commodities. Apart from the current geopolitics and China recovery hope, the impact of higher interest rates and the currency factor would also be in play, as would be the green energy transition and the move away from fossil fuels. Let's start with the crude oil prices, which are headed for an annual decline, the first one since 2020. The prices did trade in a range of $70 to $96 a barrel. 2023 was all about OPEC Plus cutting output and record high U.S. production. And then the COP28 transitioning from fossil fuels put some more pressure towards the end of the year, bringing down the 24 outlook, with Citi least bullish with $75 a barrel of a price forecast, while Morgan Stanley, JP Morgan, Goldman Sachs projected crude within $80 to $93 a barrel. Talk about silver, and that has globally hit multi-month highs, but hit an all-time high in the Indian markets for the year. There are concerns about global deficit, strong demand and the rupee depreciation. Prices gained more than 5% with projections of higher highs in 2024. Gold prices hit an all-time high in 23 in US, in China, in Japan, in Korea, Taiwan, Australia and India and various other countries. The view on the next year is of higher highs up to $2,200 an ounce. Talk about industrial metals, and there were contradicting fundamentals of supply disruptions and weak demand on the other side. 24 could support the green energy buying and improving Chinese demand. I'll start with nickel, which was the underperformer in the pack with 43% decline in 2023. 24 forecasts are put higher through and through in this metal. Zinc, and that is the second worst performing LME metal this year, slumping 16% as weak construction activity has hit the metal's main use in galvanizing of steel. But zinc is also expected to do well, with forecast anywhere between $2,150 to $2,650 a ton. Aluminum prices are also closing 23 with a negative of 2.5% as supplies idle capacity in Europe and China comes back online. For 24, it's a higher target set by global experts. And then it's copper, where the prices are headed for a marginal 2.5% gain in 23 after a very volatile year, as the street believes that with new projects coming online, it could be a state of demand. Well, the demand will start to pick up, and that would be supportive. So 24 price outlook ranges from $8,300 to $10,000 a ton. And finally, it's about iron ore, the last on my list, which is the best performer in metals with 23% of gains, and with expectation that going forward in 24, you could be looking at prices averaging at around $100 a ton.
2023 turned out to be an eventful year for the online gaming industry in India. The dynamic landscape of the industry, which emerged as a new age sector with immense perceived economic growth potential, investments pouring in and rising popularity, had the government seeing red. Timsy Jaipuria details how the government's decision to tax this sector has the industry sweating.
When 2023 began, online gaming companies were having a ball. Widespread smartphone penetration, enhanced internet connectivity, and a growing youth population meant business was booming. Industry estimates suggest that India's gaming community had attracted over 42.5 crore gamers, the second largest globally after China. This has helped the industry clock a CAGR of 28% between FY20 and FY23. Hitting a market size of 16,428 crore rupees in FY23. The real money spinner here was the real money gaming, or RMG segment. This accounted for 82.8% of the online gaming market share in FY23. The rising popularity of this segment prompted the government to increase regulatory compliance requirements. So, on the 2nd of January, it proposed amendments to the Information Technology Rules 2021. These included registration of gaming intermediaries with a self-regulatory body, KYC processes for users, disclosures on fees, charges, and the processes for depositing and withdrawing money, privacy and data protection policies, and appointing a chief compliance officer and a grievance officer with a set timeline to respond and dispose of complaints. Less than a month later, the union budget threw the sector a curveball. For online games, it proposed to provide for TDS and taxability on net winnings at the time of withdrawal or at the end of the financial year at 30%. Moreover, it removed the 10,000 rupee threshold for calculation of TDS. The idea was to plug any loophole that allowed unreported income. But higher taxation was not the only problem these online gaming companies were set to face. Acting on a spate of suicides and attempted suicides sparked by heavy losses in online money gaming, the government of Tamil Nadu and Karnataka brought in laws banning such games in their states. These quickly turned into legal battles that are far from over. Meanwhile, the government's tax machinery continued to plug what it believed were lapses in payments. Gaming company Gamescraft, for instance, received a 21,000 crore GST demand notice from the DGGI and had to seek relief from the Karnataka High Court. The court in that case was of the opinion that rummy is a game of skill and cannot be considered similar to betting or gambling activities. But this relief was short-lived. On the 11th of July, the GST Council announced the decision to levy GST at 28% on the full face value of deposits made by gamers.
Online gaming, horse racing, and casinos will be taxed. They will be taxed at 28%, each one, and they will be taxed on full face value.
This opened up ruling in the Gamescraft case to challenge. Even as this special leave petition went to the Supreme Court, Parliament passed the amendments to the GST enshrining the 28% GST on online real gaming into law. This would kick in from 1st of October. The government's case got a big fillip on the 6th September when the Supreme Court stayed the Karnataka High Court order quashing the 21,000 crore rupee GST notice issued to Gamescraft. This opened the floodgates to more such notices. The Finance Ministry has told Parliament that up till October, as many as 71 show-cause notices have been issued to online gaming companies for financial year 2022-23 and 23-24. Together, these involve GST to the tune of 1.12 lakh crore rupees. However, since these notices are pending adjudication, the exact GST demand is yet to be determined. Experts also agree that the government should not move with too heavy hand when it comes to the taxing the real or the online real money gaming, because this segment is expected to contribute between 6,500 to 6,800 crore rupees in direct taxes, including TDS and corporate tax, and a further 75,000 to 76,000 crore rupees in form of indirect taxes over the next 4 years.
Well, with that, it is time for us to wrap up this edition of Rewind 2023, where we took stock of the year that was, but more importantly, look ahead to the year that is ripe with possibilities. On behalf of the entire team at CNBC TV 18, here's wishing our viewers a very happy, safe and prosperous 2024. May you return to your TV screens with renewed vigor, enthusiasm and confidence, and we will be there just as we have been over the last 25 years, your trusted ally and partner. From all of us, goodbye, thanks for watching and Happy New Year.